All attendees are in listen-only mode.
Good morning, everyone. This is Mark Raymakers with Insurance Agency Marketing Services. I'll be your host on today's webinar. Today, you probably noticed that the invitation went out from Matt Neal, but your host today is myself, Mark Raymakers. I am the Vice President of our Life Marketing Department here, and want to thank all of you for taking time to join us this morning for our webinar on single premium life versus annuity. This is a recorded webinar, and so you will receive the recorded version of this after we have completed and compiled this and got this put together in a YouTube format. You'll probably receive this at the start of the day on Monday morning, so you can expect to see that in your inbox. In addition to that, we will be following up with a phone call. I'll give you a call, talk with you further as far as any questions you might have, any cases you might be working on, any marketing strategies we can support you with. We do have customizable marketing pieces that you can use to mail, email, whatever out to your clients and prospects. So we are having this webinar this morning because one of the things we find out or have found out in years of doing business in the single premium life market, that a good share of the business that comes in the door is coming from annuities. And so for those of you that are in the senior market that are working with the clients that have dollars sitting in annuities, what we're showing here today is why you would want to consider single premium life as an alternative to that. Because many of these annuities that are sitting out there today are actually just being passed on to the next generation when the client dies, as it sits in an annuity. So why not leverage that? Why not put that in a position to where it's going to be more advantageous to not only the client, but for the beneficiaries as well? So let's go ahead. That's why we're doing a comparison to show you if you can sell annuities, I guarantee you can sell single premium life. It's a little bit of a mindset, a little bit of an adjustment. But when we do that side by side, you'll see how simple and easy it is, how similar they are. First of all, some things about Insurance Agency Marketing Services, how we can help you. Well, for those of you that are brand new, and I see a lot of new faces, or I shouldn't say faces, a lot of new names. I can't see anybody, I promise you that. But a lot of new names this morning. And so here's what we do for you. When you're brand new with us, you get contracted. Let's say you write $100,000 in single premium life. You have an option that you can get a new bonus for being a new producer with us. Not only are you going to get the commissions, but this is in addition to that. So you could choose either $750 in cold cash, or you can get a 3-year subscription to the website newsletter service. If you do not have a website, that's a nice little advantage, a little benefit there. Or if you just want to buy into one, get one set up, Matt Neal in our office can help you. He is very capable, very good at this. He's the one that obviously designed our website, but you can call and ask for him. Or if you don't choose either of those two, you can get yourself a new iPad. Those are great for those of you who do not have them. They are a super business tool. You can take applications through iPads and never get the wrong forms. Okay, let's say you write $300,000. Now these numbers also apply dollar for dollar in annuities, or a target life premium is a derivative of that. So let's just say for today's purposes, single premium life. You write $300,000 single premium life. You have an option between the Social Security program. This is a great way to get in front of more seniors. Let me tell you, if you're not hearing or seeing this in your market, in your area, it's certainly worth considering. You could buy the program if you wanted to. Steve Murray can visit with you about that. But those agents that have taken advantage of this program have definitely seen an increase in their business. So keep that in mind. Or you could choose the $2,000 matching marketing money to promote your business. That's a neat little way to do some marketing, branding, however you want to use this. Again, Matt Neal in our office can help you with that as well. Or you could just choose the $1,500 gift card, do whatever you want. The last level is a $500,000, and believe me, it's very easy, or I shouldn't say easy, it can be easy and very capable for you to do a $500,000 in single premium life. We have agents that have done $1 million plus in this market, in addition to everything else that they're doing. So let's say you wanted to go ahead and cash in at that point. You can get the 5,000 piece mailing and seminar coaching with Matt Gill, or 4,000 piece mailing and seminar coaching with Dave Pimper. I'll tell you, both of these agents are top producers with us. That's how they market. That's how they sell. That's how they are so successful, is through seminar selling. So you could certainly contact these agents, and they can get you set up with their program through either earning it this way or buying. It's up to you. Finally, there's the Ritz-Carlton Travel Rewards if you just want to take your own vacation. Now, just real quick here, I'm going to tell you, we have life and annuity training academies. We do 3 to 4 of these a year. And right now we have one coming up, and this is October 21st, 22nd, and 23rd. And I'm going to tell you this real fast. If you have any interest in attending this event, I need you to type in yes. And what we'll do is we'll get you out an application. We'll get you on our list of upcoming events. But this is just a simple, we pay for your airfare, we pay for your meals, we pay for your lodging. It's a great way for you to grow your business on the annuity side and the life side, or maybe you're doing one or the other and you'd like to learn more about or do more selling across the aisle there. And maybe you're selling just annuities but want to offer life insurance and vice versa. So this is a great way for you to grow your business. If you're interested in any way, you can type the word Academy in the question box or type the word yes, and we'll get you out an application. Okay, real quick here, insurance email newsletters. This is something else I mentioned Matt can do for you. He can get you set up to where you have your own website, set you up with client management tools, email newsletters. Again, this is a way for us to help you to support you in what you're doing. And if you're not taking advantage of the internet or you're not taking advantage of electronic media today, we can help you do that. We have got a great program set up to help you with all of these different aspects of your business, and it would be remiss if I didn't tell you about that. So take a minute here next week, if not today, call and ask for Matt Neal and ask him about these different programs we've got available. He would be more than happy to take time to get you out some information and support you on that side of your business. Just about ready to jump into the meat of the webinar here real quick. I want to tell you a couple more things that are really neat. One thing is a referred producer program. I know that obviously myself being in the business since '88, that we all run into people, other agents that are successful in the business or agents that maybe just are maybe struggling to get some good back office support. They're not at a point where they're going to pay a staff to take care of all their back office, but we do that. And so if you refer someone to us, we're going to provide them all that support as well as yourself. But what happens is when you send us a referral, we're going to send you a check for $50 just for contracting. In addition to that, every single time that they write a piece of business, you will also receive an override, so to speak, a 20% basis points on every single thing that they do. And so as long as you're writing business with us, you're going to accumulate money in an account. Each quarter, we send you a check for the business that they are writing. And this is as long as they're doing business. So this is a neat little way for you to make a little extra money and help your friend out as well. Neither one of you take a commission hit, by the way. It's just a thank you is what it is. Now, lastly here, we have our marketing reimbursement program. Every time you write a piece of business, so let's say you write a $100,000 single premium life, we're going to put $200 into a marketing reimbursement account for you. And that sits there as long as you want it to. And so let's say that you write two pieces of business with us for $200,000. You now have $400 in your reimbursement account in addition to your commission. So let's say you're going to have a little Christmas party with your top 10, 20 clients. You spend $800. We would receive your receipt via fax, email, however you want to get it to us. We will turn around and send you a check for $400. We will clear out that marketing reimbursement account. We reimburse you up to 50% of whatever that expense is. It could be letterhead, it could be envelopes, it could be stamps, it could be whatever it is to support you in your business. So that's a neat little way for us to help you be a partner in covering the expenses or help cover the expenses in your business in addition to commission. So, okay, I had a real quick question. Is there another annuity training opportunity after October 21st? This would be our last training opportunity for the year. Then we'll go into next year and we'll have them again. Usually have them probably first one's April, May timeframe. So good question. Appreciate you asking that. Okay, let's go ahead. Let's get into the meat of the webinar here this morning. Again, I noticed some of you new just jumped on here. But really what we're talking about here this morning, and it's just as simple as this. First of all, every Friday we've dedicated to single premium life because we write so much of this business and know that there's great opportunity out there. Okay, and so for those of you who have written annuities in the past, this is just a great opportunity for you to go back to your existing clients, and we'll talk about this a little bit more towards the end. Who's a prospect, how we can help you. But stop and think about it. If you've written annuities in the past, are you going back and seeing your existing clientele? Are you showing them opportunities to maybe leverage the funds that they have today and to reposition them to better serve them, better serve the beneficiaries? A lot of times what happens is you write an annuity and maybe we're not going back to do a review. The client passes away and it just goes to the beneficiaries. So in the process of us handling annuities, and we've been doing this now for 29 years. And that's how we got our start is through the annuity market. And I periodically will go and take a look at the suitability forms, and you'd be surprised how many annuities are written that are just going to be passed on to the next generation. And so we thought, well, gosh, why don't we look at setting these plans up to go more efficiently to the next generation by offering a single premium life plan? We right now at this point, I believe we have 11, if not 12 different companies that we can make available, make a single premium life product available to you. You'd be really impressed what we can do to help your clients. So my thought was then, when I'm talking with agents is, do they understand how easy it is to write a single premium life? And a lot of times they don't. They think of it as the traditional policies of old. And a lot of agents got out of selling life insurance because it was burdensome for them. Annuities were easier. So that's why we're doing this today. I want to show you how easy it is, how similar they are, and that's what we're going to cover here this morning. So if your client has an asset they don't plan to live on, is in an annuity really the best place to leave the asset or place more money into? Because we see that as well. We just keep dumping money into it. Or the next question really is, or is it the easiest and most convenient sale for the agent to make a commission? And you know what? I think the path of least resistance is where we're going here with that. So hopefully that's not really what it's about. So here's what we're going to compare today. The things when you look at an annuity, why do we sell an annuity? What are the benefits and features that we're selling that annuity for? Obviously, we're going to talk a little bit about suitability. And again, this is going to be a pretty short, quick webinar, so you'll get the meat of it real fast. We're going to talk about turnaround time, return of premium, which is an important feature, guaranteed interest rates, which are a big deal, exams, underwriting. That's always been a concern about life insurance. Withdrawals, loans, accelerated benefits, the chargebacks involved, the different issue ages, tax deferral, tax-free transfers, commissions. So these are the simple side-by-side comparisons. And again, these are some of the things that keep agents from selling single premium life, and as well as the benefits and features. So let's go ahead, let's make a side-by-side comparison of these here, and let's just see how similar these really are. So first of all, if we look at suitability and product training, single premium life, you know what? Of most all of the companies that we do business with, there is no suitability. There is no product training. With annuities, yeah, unfortunately, every time you write an annuity, as you all know, you have to go through the product training. In fact, some of you have probably written these in the past and end up finding out that you didn't do the training, so you got to go back and do that and redate the app. So it can be quite burdensome there. Single premium life, that's not the case, except on certain products. And generally the products that I would be talking about would be the ones where we're using qualified assets. And we can actually do this. We take qualified assets, put it into a combo product. We have a handful of companies that have a SPIA Life combo. They work in conjunction. So at that point, yes, you'd have to complete the suitability because we have to use annuity to make it work. So very similar. Single premium life has the edge there. The turnaround time. Let's take a look at this. We're up to, or should I say, we're at up to 1 week in underwriting for single premium life. Annuities, if you write an annuity today, it takes about a week to get it approved and get back out to you. That's how it is on the single premium life. In fact, we have carriers out there today that you could go and sit with a client. Let's say a client says that they've got $100,000 they just inherited, and you're thinking single premium life is the best bet. You can go in there with an application, complete the application, you do a telephone interview, and we've got these carriers that will actually approve it right there on the spot. So you'll know if they're approved. You submit the application, they turn around, they send you a contract, as well as the commission check. So as fast, if not faster than an annuity, immediate approval, average is 1 week turnaround time. All right, return of premium. Now, I know a lot of times we're selling annuities. We want to make sure that that client has a lot of liquidity features to it. Return of premium is one that's very popular. We do have a handful of carriers as well that will give your clients a 100% return of premium on their money in that single premium contract. And it's from day one. They could have that contract for 6 months and say, hey, you know what? I need my money and I want it all now. They get it all back. Annuities, yes, we have return of premium, full return of premium on the annuities. Premium bonuses. This is kind of nice. We have products in the single premium market that do have a bonus up front. So much like you're used to in your annuities today, the same strategy there. We provide up to a 12% bonus on the single premium life. We have other carriers that'll do 10. So very nice. Of course, the annuity's got a little bit of edge there because we're going to get up to 15% bonus. So if you have clients today that are used to a bonus in their annuity product, and it's sitting there now, maybe it's beyond its surrender period, maybe it's got up to 12% surrender charge, but a single premium life makes sense. Again, remember, you roll it into the single premium life. Not only do you get the bonus, but you also get a bump in value because now we're looking at death benefit. And with these products today, we're going to talk about this here in a minute, how these accelerated benefits work. Guaranteed interest rates, yes, we have guaranteed on both sides. We can guarantee up to 3% right now on a single premium life, whereas annuities, you're probably looking at best maybe 1%. So we've got an edge on the single premium life. If your clients are looking for guarantees, we're getting something better than what they'll see in a CD today. So that's a big jump. So if you got clients sitting in CDs, look at the single premium life as well. Physical exams. Okay, there are no physical exams with any of the single premium life products we have today. So you don't have to worry about someone coming to your client and having to complete an exam. We just simply do a paper application and a phone interview on every case that you write for single premium life. It's very, very simple. Of course, there is no underwriting like that on annuities, so very similar there. All right, free withdrawals. Yes, we do have plans that have free withdrawals, just like your annuities do. In fact, quick sales idea, if you've got clients who are sitting on annuities, if they're not taking advantage of that 10% free withdrawal, why not show them how they can take a 10% free withdrawal, get a final expense plan, get it paid up, and really they're not out really anything other than just the 10% out of the annuity. We're just taking money from one pocket, putting it into the next. And we can get a 12% bonus on that, by the way. Okay, so we have up to a 10% free withdrawal on the life insurance and up to 15% on the annuity. So still pretty decent if you think about it. Loans, single premium life, yes, has loans. Annuities, no, there are no loans on that. Looks like we had a quick question. What is the tax ramification of rolling an annuity into a single premium life contract? Well, if you are, first of all, we can't roll an annuity into a single premium life. We could roll it into a combo product that has a single premium immediate annuity and a life plan. In fact, we've got contracts right now. We've got the National Western, Equitrust, Baltimore Life, One America that all handle that qualified rollover of funds. So we can help you with that. Otherwise, if you were to take a qualified asset, put in a single premium life, if you don't use the combo plan I'm talking about, the client would have to surrender that qualified account, pay taxes on the entire amount, then put in a single premium life. Conversely, if you've got a client who has non-qualified assets but has some growth on the contract, of course, if you surrender, when you surrender that to put it into single premium life, they'll just pay taxes on the growth of that contract over and above the cost basis. Can we exchange universal life into single premium life? Absolutely. In fact, that's one of the things we do see. There's a lot of UL policies that are in trouble out there right now. And so we're doing a 1035 exchange into the single premium life. We're saving those policies that are going to lapse because of the fact that interest rates have come down. So your clients are probably in trouble if they've got some of those old UL plans. And there's a question here, do plans have long-term care? They do. In fact, we'll talk about that here in just a minute. We have plans that, in fact, we're going to talk about the issue ages. So I might just hold off on some of these questions here because we're going to address these in just a moment. So loans, when we're looking at loans on these plans, if you wanted to borrow funds out, you're talking about up to 4% net roughly. There are no loans on the annuities. So here's what you're asking about, the accelerated benefits. Okay, so single premium life does have accelerated benefits. In fact, most every single one of the single premium plans that we have do have the accelerated benefits. That's one of the beautiful parts of it. The annuities do as well, but as you know, with the annuities, those are generally going to be taxable. With the single premium life, they are not taxable because it is considered, an acceleration of the death benefit. Now, we have plans out there today, just real quick to answer your question on how those work. With the single premium life plans, they are accelerating the death benefit, okay? So that's a tax-free benefit more times than not, okay? I would say probably 99.9% of the time they have been from what we have experienced because they're all individually owned and there's no reason for there to be taxation because of that individual ownership. But what happens is the companies will take the death benefit depending on the company or contract you put your client into. Some will do a lump sum of the death benefit. So they'll pay up to maybe 90% of the death benefit for confined care or home care. Others will do a percentage, so maybe 2% of the death benefit each month for a confined care, maybe 1% for home care. Some will also do a monthly. So they'll take the death benefit, they'll spread it out over 36 months or 60 months. So 36 months for confined care, 60 months for home care. So those are generally how you'll see that accelerated benefit. So let's stop and think about this real quick. You have clients sitting in annuity, and they know that they're going to pass it on to their kids. There's just no use for it at all. So if you have, an example, $100,000 in annuity, and they don't have long-term care, they might consider drawing on that annuity for that benefit. But if you take that and put it into single premium life, now you're nearly doubling the value. So that, what would your clients rather have? $200,000 for long-term care or $100,000 for long-term care? That's the difference. So there is a huge difference in there. So keep that in mind as you're going through your client files. Now, issue ages, we're going to talk about that here in a minute. My voice is cutting off. I'm sorry. I don't know why that would be. I apologize for that. Hopefully you can still hear me okay. Someone's asking, do we have a case for 90 plus? I've got a trust product that we use a lot of times, and we can go up to age 99 on that. So hopefully you can all hear me okay. I noticed that there was a little flicker on the screen, and hopefully you can hear me okay now. Let's see here. Hopefully that's better. I just hit the mute button. Hopefully it's gotten better. No sound. Folks, I hope you're hearing me okay. I'm not really quite sure what's going on to where you would not be hearing me, but it looks like we're running into some issues here. Okay. Well, okay, I'm going to see if we can do it. Hopefully you can hear me better now. Some of these comments look like they may have been a little bit older, so hopefully you can hear me okay now. Looks like it's back on now. Great. Okay, thank you. What I did is I had to kind of reconfigure the sound here. So, all right, appreciate all the comments on that. All right. Okay, missed what I said about the benefits. Okay, let me go through the accelerated benefits again with you real quick here. Okay, so what happens is when we are talking about using single premium life, the companies are using the death benefit on the, okay, folks, I got a million comments on the sound. Okay, I'm good here. I don't know why it's cutting in and out. I'm sorry that that's an issue here. So what happens is the companies are using the death benefit to accelerate for long-term care. So an example is, let's say you've got a client that's got 100,000 sitting in annuities. And if they use that annuity for long-term care, what happens is they're just using dollar for dollar. And when you look at the single premium life, if you take 100,000, you put it into a single premium life for a 65-year-old, you're doubling the value that they could have for long-term care. So now a $100,000 death benefit is in excess of the annuity. So let's say you have $200,000 death benefit now because you put 100,000 in there into the single premium. So the companies are now going to pay out either, depending on the company, they'll do it like a 90% of the death benefit in one lump sum, or they'll take a percentage of the death benefit, either 2% for confined care or 1% for home care, or they'll take the death benefit, they'll take it and spread out over 36 months for confined care or 60 months for home care. So depending on the company or the product that you go with, that's how the accelerated benefit would be paid out, and that's coming tax-free because it's an acceleration of the death benefit. So if your clients don't have long-term care, if they have annuities they're not going to live on, why not just take it from one pocket, put it into the next, and give them a nice bump in value? Believe me, if you were to go and approach your clients' children, the beneficiaries, and ask them, I've got two buckets for you. One's got 100,000 in it. There's going to be a little bit of taxation on it. The other one's got 200,000 tax-free. Which would you choose? That's really what it comes down to. And when it comes to presenting it to your clients, even ask them, what would you rather give your kids, 100,000 taxable annuity or 200,000 tax-free death benefit? I'm sure that we know the answer to that one. Okay, let's look at chargebacks real quick because this is an important feature. I don't know if it's so much of a feature as it can potentially be a detriment to the agent. But there are chargebacks on single premium life, depending on the carrier. Some of them are 1 year, some of them will be 2 years. So you want to make sure that your clients hang on to it, especially when they have the return of premium feature. A lot of the agents are telling their clients, I'm not condoning this, but a lot of them are telling their clients that you can hang on to the contract for 2 years, at which point then you can get your money back. But again, that's just a protection so you don't have a commission chargeback. So those are the same in both cases. Issue ages, we can go from age 0 to age 85, and then obviously on the annuities you can go to age 0 to 90. But we do have, if we're looking at a single premium, I have set those up with John Hancock. They will issue up to age 90. Just a little bit of a strategy here to set that up so that it works. Or again, if they've got a lump sum of money, they want to put it somewhere where they can shield it, they can get some growth on it, then we probably look at putting it into one of the trust products that we have here. Okay, is a single premium life a traditional whole life product or interest-based product? You know what, we've got a number of different products here. So Angela, we can use whole life, we can use index life, but generally they're built on a whole life chassis with guarantees. So once that premium is put in, nothing is ever required to be put in again. Some of them endow, some of them actually grow over time. So it depends on the product that we're going to put it into. And that's one of the nice things about having the portfolio that we have. Depending on what your client's looking for. I ran one this morning for an agent, $200,000 death benefit on an 82-year-old. They wanted to put it somewhere. They wanted to guarantee it. They didn't want to mess with fluctuations in cash values or death benefit. They just wanted to know this money was not going to sit in that annuity anymore and be taxed. They're going to put it in a single premium life. We got them a nice bump in value, growing tax-free, tax-deferred, and live happily ever after. Okay. Now, if we do a product, I'm going to make a quick note of this here on the up to 90, age 90, from 85 to 90 on the one plan I mentioned with John Hancock. That would be fully underwritten. Otherwise, from 0 to 85, there is no exam. It's very, very simple. Okay. Had a question Angela had here regarding the death. That's not a loan. The accelerated death benefit is an acceleration of death benefit. There's no loan involved at all. Okay, tax deferral. Obviously, in a single premium life, we all understand that life insurance, it grows tax deferred. The cash accumulation buildup within the contract does, just like an annuity. So if your clients are looking to put money somewhere, they really don't want to have to worry about taxation on it. They can do that in the single premium life. We do have some great index life products that are going to get a good growth rate. We've got some, obviously they're paying about 5 to 6% with a 25-year look back. So they're getting some decent growth on the money. In fact, if you compare it to a lot of other annuities or CDs out there, these are actually doing extremely well. Okay, tax-free death benefit, of course, it's life insurance. That death benefit, whatever that contract buys, and as I mentioned, some of those grow. So although maybe it starts out at a $200,000 death benefit today, in 15 years it might be $240,000, $250,000. So some of them grow, some of them don't. It just really depends on what your client's appetite is for that particular contract. Annuities, there's no tax-free death benefit, unfortunately. So, of course, single premium life has an advantage. So, again, as I mentioned, your clients have the option to pass on an annuity that they have today that's taxable versus putting into single premium life that's tax-free. Now, real quick, just a quick thing that I've encouraged agents to do is maybe you do have that client's got $100,000 sitting in annuity today, but they're really on the fence. Everything that's coming in right now is covering all their expenses and then some. So they're happily retired. They don't really see any reason that they'd touch that annuity, but maybe they're a little bit skittish, a little bit scared about putting it somewhere else. Remember, you've got the return of premium feature. You've got the loans. You've got the free withdrawals if they want to put the whole thing into single premium life. But maybe make this recommendation. And more times than not, when you show them, you got 100,000 annuity. Let's split that annuity in half. Let's leave 50% of it in there. Let's let it get some growth, and let's take the other 50% and put it into single premium life. Now that 50% that they've moved over here is turned into about $100,000 death benefit, for example. Now they have $100,000 they can use for long-term care that they didn't have before, or home health care. Or now they're going to take $100,000 and pass it on tax-free, which will cover the taxes that would be due on the $50,000 they left in the annuity. So there's definitely some opportunities there. Okay, I had a question pop up. I'm going to read this real quick here if you want to give me just a quick second. All right. Okay, it looks like it's more of a comment. Yeah, Angela, that's basically what happens. Once they I like these plans where they do a monthly payout because let's say the client is in a facility for a year and they pass away, whatever they haven't taken off of that death benefit for their care now goes into the tax-free check that the beneficiaries would receive. Okay, again, my name is Mark Raymaker. Someone asked my name. I'm not Matt Neal. And yes, you can get brochures. Be happy to send you out whatever we have here. And again, we do have a number of different carriers available to you. So, all right. Yeah, you could see some comparative numbers if you want. Absolutely. We can send out whatever you want to see. Okay, commissions. This is what's really nice in single premium life. We have plans that pay up to 15% commission. If you look at compared to annuities, that's a pretty darn good comp. And I would say that when we look at, I mean, 10% on the 10% on the annuities, but if you look at the average commission that we're seeing on single premium life, you're talking anywhere from 9% to one of the very popular plans, right, is 14%. So you could figure you're probably going to get on average about 9% on your single premium life cases that you write. It really depends on the age of the client too. It depends on the company or the product that you go to. But the nice thing is we can go as low as a $5,000 premium, or we've even got products that'll go down to $5,000 death benefits. So whatever premium it would take. I know myself, I've been in the field. I was an investment banker for a short while. And I had clients that would come into me and they would have $2,500 or $3,000 sitting in the bank, and that was their final expense plan. So I would take those little $3,000 CDs and put them into a single premium plan, such as what I'm talking about. We just need enough to buy a $5,000 death benefit. And the nice thing about that is that money that was sitting there in the bank as their final expense plan, they're paying taxes on that every year, getting just a little bit of growth, wasn't even keeping up with inflation, but still they're paying taxes on it. So keep that in mind. We do have some products that go to pretty small face amounts. Do I consider One America Asset Care under single premium life? I do, yeah, and we have that product, so that is an option. Okay, let's see what else we have here for questions that are popping up. Well, some of these, as far as the comparative reports, I don't want to say there's necessarily comparative reports, as we would just do illustrations for you on that. So, single premium life, obviously that's a good question. Avoids probate going into single premium life. The minimum face amount of single premium life you can buy, as I just mentioned, it's $5,000. And minimum age, again, we can go to newborn babies. We can go to 0 on some of these now. So, okay. Just looking at some questions, some comments. Well, Frank, annuities are not tax-free death benefits. That's just the way they are. So, tax benefits, I'm not really quite sure. All right, so let's see here. Questions keep popping up. Are there, as far as products with a 0 net loan, generally the single premium life products do not have that. I just, they're just not set up that way. I know, like, if you look at a lot of the IUL products we've got available have a 0 wash loan at, generally at 10 years, depending on the product. But folks, I'm seeing some questions on giving you rates. I don't have the brain to calculate, if you put in a premium, what the the death benefit would be on certain ages. But I will tell you, I'd be more than happy to run you some quotes later. I just can't calculate that for you. But I can tell you, generally speaking, if you have a 65-year-old, let's say they put in $10,000 in premium, they're going to get a $20,000 plus death benefit, or $100,000, they get $200,000 death benefit. So I can tell you that. But from the different ages, I would need to actually sit down and run the software to determine what's going to be the best. So, yes, Charles asks, can single premium be used for final expenses? Absolutely can. And that's where what we're doing is we are periodically seeing agents taking 10% free withdrawals. In fact, someone's asking questions that are actually on the screen right now. So who's a good prospect? I would say any existing client or future client that has existing assets they're not going to draw an income from. And the one thing that I do hear with some agents that are really, I guess, in tune with their clientele, they know that about, we got a majority of the clients, once they're 70 years old, they're not taking or spending as much money because they're kind of slowing down a little bit. Where some say, yeah, hey, I have clients that are 75 years old. They're world travelers. They're seeing their kids going from coast to coast, visiting grandkids and doing all that good stuff. But generally speaking, those that are sitting with an asset of some kind, they're not going to earn income from. We have seen quite a few mutual funds. Worked on one this morning that client's going to liquidate a bond fund and put it into single premium life. So, really, we can take assets from anywhere your clients are going to have them. I also say annuities beyond their surrender period. If you're not going out and doing reviews with your clients, I would certainly do that. Find those annuities that are beyond that surrender period and basically go to those clients and show them an opportunity for them to leverage those funds, get a growth in value, use those for accelerated benefits like long-term care, home health care. Clients that are turning age 70, and here's why I say this. This is the year, if they have qualified assets, that they have to take an RMD, right? So that's a good way to go back, look at those clients. If you've got a CRM program out there where you can look for those clients that are age 70, we can talk with you about how we can use those qualified funds and put them into these plans. Clients that have celebrated their retirement this year, sit down and do a holistic approach again. It's time to say, okay, and obviously if you're managing funds, we want to probably look at, if they're mutual funds, maybe we want to start looking at some income funds right now, make sure that they're safe and they're going to provide the income that they need. Clients taking the RMDs, as I mentioned, maybe they're already taking an RMD and they don't need it. More times than not, we see clients out there, or your clients, that are just taking RMD and sticking it in the bank, and that's unfortunate because they're not going to get any value, really, any growth in there. So we're taking those, we're putting them in single premium life. Clients that received an inheritance. So many times we see them just going into an annuity right away, and maybe it's because they have to have the income. But if not, folks, let's consider single premium life. I mean, you can see what it can do. I showed you the side-by-side comparison. CD owners, again, we've kind of addressed that a little bit. That money's just sitting there. It's not really doing them any good. If it's rainy day liquid money they want to get their hands on, remember, there's free withdrawals. There's the return of premium if they want to bail out. There's loans if they need it for accelerated benefits. I mean, just look at all the opportunities out there. I mentioned the RMDs, 10% free withdrawal. Again, if you've got clients that are sitting with an annuity and they don't think they're going to touch it, but they don't want to move it over, the longer they hang on to that, folks, the longer, or I should say, the higher that tax burden becomes with that growth in there. So if we're taking 10% free withdrawals out, we're kind of controlling that growth that's eventually going to be taxable one day. Cash value policies with current premiums, kind of talked about that a little bit here this morning already with the 1035 exchange from those ULs that are in trouble. But obviously, if your clients are paying premiums on life insurance today, you stop and think about it. I'm a little ways from retirement myself, but when I think about the fact that I'm going to be retiring, I don't want to be paying premiums on anything if I don't have to. So maybe they reach that point where they've got a policy they're paying premiums on. They might just say, yeah, I'd be happy to just consolidate my life insurance policies, have it all put into one, have it paid up, and know it's over and done with. And now I've just put some money back in my pocket again, and I can travel until I'm too old, too tired to do it, whatever the situation would be. Again, overabundance of annuities. If you've got clients out there with a bunch of different annuities out there, I mean, you really, I think, owe it to them to go out and do a review. 51% of the agents in this business are doing reviews today. So that's not very many. And I can tell you right now that I have an agent, it's a friend of mine. He was an annuity producer, called in one day, and he was talking about annuities. And I asked him if he did anything on the single premium life. If he did reviews with his clients, he said, yeah. I convinced him he needs to go out and show him single premium life. And he did. He wrote about $1.3, $1.4 million in single premium life that year. Now stop and think of the commissions we talked about. He was getting 14, 15% commission on that. So a very, very good year for him. I can tell you right now, if you allow me the opportunity to talk with you, we're going to put some money back in your pocket you didn't have before. Let's say you write $100,000 single premium life per quarter. That's $36,000 you're putting back in your pocket. And if you've written annuities on those clients and they're just sitting there and you're not going back to see them, and there's an opportunity for you to move it over, why not put $36,000 in commission in your pocket this year or next year? We can start. We'll get it going here for this next quarter. Have yourself a great Christmas. So keep that in mind. How to sell single premium life. Here's something that I've tried to present before in many different ways on how to maybe approach a client that you haven't talked to for a while, or maybe you have talked to them. But stop and think, if you could show your client a product, you ask them, if I can show you a benefit plan that will provide you 100% return on the money you put into it, and up front we're going to give you a bonus of 12% on it. You can take a 5% free withdrawal out of it anytime. This index link returns averaging 6.5%. That needs to be updated. Let's say 5.5%. Okay. If I can get you index link returns averaging 5.5% with a 2% guarantee on your money, no matter what happens in the market, you have indefinite tax deferral, so there's no taxes on that growth within the contract. And if something happens and you need funds for long-term care, home health care, it'll provide coverage for that. And if you never touch it, it all goes tax-free to your beneficiaries. Is that something that you might have some interest in? I'll guarantee you right now that your clients are more than likely going to tell you, yes, tell me more. Okay, we've got something real quick here for those of you that like to travel. We have our top producers escape trip, and this is, if you can see here, qualification period started January 1, goes to June 30th of next year. This is for producer and guest, 1.5 million in single premium life. Or of course, there's a combination. If you write a little bit of annuities, a little single premium life, traditional life, it all goes together towards this trip. So you have until next year, June, to do that. We're going to go to Victoria, British Columbia. Beautiful location. We can help you in so many ways. As I mentioned, you've got the reimbursement for your marketing expenses, the commissions, and the trip all in the same dollar. So it's a great opportunity. Okay, it looks like I got some questions here. Let's see if we can address these real quick. Let's see here. There are no single premium life products out there that don't ask any health history questions. We do have, again, we've got a trust product. It's guaranteed to anybody, but there is a health question. So no one's turned down on that, but it depends on what kind of a rate you get as far as, in the end, it affects the agent commission. That's it. Okay, so you have a client. Okay. Garner, you look like you have a client that's taking RMDs now. This is a perfect opportunity for us to talk. So let's be sure that we do get a chance to do that, and I'll show you what I'm talking about. Angela, why don't we can certainly talk after the webinar, but if a client's taking 5% free withdrawal off of their single premium life, what happens is just basically it reduces the cash accumulation in the account. The death benefit still remains the same, but yeah, it's just going to start reducing the cash accumulation. But can you get this PowerPoint? Yeah, I have something I can email over to you. In fact, basically what I've got for you is a side-by-side comparison on one slide. So yeah, I can make that available to you. Could I go back to the previous slide? This slide here, yes. I'll leave it right there for you, Michael, if you want to write some of that down. And folks, obviously what we want to do is we want the opportunity to earn your business. And so you can expect a call from us here after the webinar today. And, certainly appreciate just a few minutes of your time to, show you what we can do, how we can help you with this side of your business. Because as I mentioned, if you're in the senior market at all, we have found out that if you've got $1 million in annuities, you have got at least one case for $100,000 in there. You probably have more, to be honest with you, but it's at least $100,000 per million that is out there. So however long you've been in this business offering annuities, there's most certainly opportunities out there. So, okay. All right. Okay. I'm just looking at another question here. Good question here from Todd. He says, if the client's taking a 10% withdrawal from an annuity, would they have to get a new single premium each year? Something, Todd, if you were going to do the true single premium life, then yes, we do have some other multi-pay, simple type life plans like this. So let's say that your client was taking out the free withdrawal. Obviously, they're going to change a little bit each year. But what I have done in the past is, let's say they're going to do that for 3 years, 5 years, or 10 years. We look at what the last withdrawal would be, and that would be the premium we would set the policy up at, because we want to make sure that our withdrawal is as we take that out, that the premium we're putting into the insurance plan remains level every year. That's how these plans are designed and developed. So we could do that, yeah. But whether we're going to do a fully underwritten plan or we're going to do one that's simple issue, we could do either one. So we can certainly talk about which strategy you'd like to employ for each particular client. So, okay. Doesn't look like we have any other questions, but every Friday, if you want to learn more about single premium life, if you want to learn more about what we can do to help, I mean, again, we've been doing this for a long time. We started in the single premium life market when it wasn't really popular, but now we're seeing more and more companies are getting into this market. There's more and more products available because it's real. There's a lot of seniors out there today that have got these funds that are sitting there, and they're going to die on them. And so what we're doing is we're trying to help them to realize that there's a better place, there's a better option or benefit to provide the beneficiary by using single premium life, of course. Okay. All right. Yeah, Dennis, I mean, there's obviously creditor protection. I mean, if you're putting, just like single premium life is like any other life insurance policy out there. It has all the same benefits, passes through probate without any problem. Obviously if you're concerned about how you're gonna, I'm sorry, I'm trying to read and talk at the same time. Not a very good strategy here. But if you're concerned about that, obviously you can set it up in the trust. So, okay, with that said, folks, I am going to conclude the webinar here this morning. If you have any questions, you can certainly call our toll-free number, which is 800-255-5055. I encourage you to ask for anyone in the marketing department, and they would be happy to help you. We all work in the single premium arena, and so we can all help you. But I want to thank you so much for taking time to join us this morning. I will get this over to you here. If I can get it to you here before the end of the day, I will certainly do that. If not, it'll go out to you early on Monday. But thank you for the kind words. Hopefully this was helpful. Hopefully we have an opportunity to work together. Look forward to speaking with you soon. Thank you.